Hi, this is Adam Stern with Own America. We're going to do a portfolio review on 3 separate portfolios that are owned by the same owner. It's actually 35 properties in the Atlanta, Georgia market. The owner owns these properties in 3 different LLCs, and each segment actually has different financing on it, and it needs to sell each segment as a whole. That's why we segmented the 35 property package into 3 separate portfolios. So we're going to go over the portfolios on ownamerica.com right now, and we're going to review the fundamentals and the numbers. Should be fun. All right, so we're going to go to ownamerica.com right now and type in Atlanta, Georgia, and that should bring up all of the portfolios that we currently have in the market. We have a total of 7 portfolios in the market with 158 matching properties. The 3 that we're going to talk about or review right now are this 1, 3, 6, 4, 6, 5, and 6, 3. 20 properties in one, 8 properties in the other, and 7 properties in the next. So for the 20 property segment, first thing I always look at is how tightly grouped the properties are together to get a really good sense of how all 3 portfolios look in the same package. I just did a quick batch geo, and you can see that each one of these portfolios that are denoted by separate colors are in a pretty tight concentration in and around Atlanta. The great thing about this portfolio is it's basically managed by one property manager right now, and my assumption is anyone that buys any or all 3 can actually do the same. And in Atlanta, generally properties that are 3-bedroom, 2-bathroom, above 1,100 square feet, built as recently as the late 90s and early 2000s, they move pretty quickly. So you can see here, these are all very decent, middle of the road, Class B properties. They're a C3 condition score, which means the properties have been well maintained and recently renovated. The yields on them seem to be really, really good based upon what we've seen in the past in Atlanta. Atlanta is one of those markets that got hammered during the downturn, so people picked up properties on the cheap in 2009, 2010, and beyond, and cap rates have been compressed pretty steadily over the last few years. We used to see these properties trade at a 14 and 15% gross yield a few years back. Just recently, we've been seeing them trade anywhere between a 10 and 11% gross yield. So for this 20 property package, it's listed at a price of $2.772 million. At asking price, it's a 10.31% gross yield and just above a 6% net yields. I know I buy these numbers because it has an expense load of about 40% on it, which means, if a portfolio lands in the 40 to 44% expense load area, the cap rate's probably going to be pretty believable. You can see that the home price performance in Atlanta has been extremely strong. Home price performance in Fulton County, where most of these are actually located, you could see the price increase here before the downturn and the massive hit it took during the downturn. You could see that property prices have recovered above where we were in 2007, and property prices are actually higher than they were back then. So property prices are high. I would expect to see lower yields as results, since property appreciation generally outpaces rental growth. County appreciation average for Fulton County is 3.14%. That outpaces the state of Georgia, and it's just a tad under the national average of 3.44%. Population has been steadily increasing in the market ever since 2005. You can see the population in Atlanta right now is about 486,000 people as of 2017 census. If you look at the unemployment rate in Fulton County, it's just a tad bit higher than the state of Georgia as a whole. So it's right in line with what kind of the state of Georgia is doing in terms of employment. The top employers in Atlanta are business and professional services, trade and transportation, government, education, leisure and hospitality, and financial activities. It's always interesting when you see professional and business services as the top employment segment in the market. It generally means there's a large population. They're affluent, they're spending money on those kind of services. I always look at who the major employers are in the market, and you can see in Atlanta, it's like a who's list of Fortune 500 companies. Home Depot calls Atlanta home, UPS, Coca-Cola, Delta Airlines, just a really, really impressive roster of companies that are employing people in and around Atlanta. So let's look at another segment of this portfolio. This one is 8 properties, same basic area, in and around the southeast quadrant of Atlanta. Same basic deal with this portfolio, middle of the road properties, all newer builds. You look at the financials on this portfolio, I'm assuming the yield's going to be a little bit better. Yep, this one's listed at a total price of $900,000. Total gross yield of 12.28%, total net yield of 7.48%. Probably has something to do with the neighborhood quality and the fact that these rents are higher than the previous portfolio. So this portfolio is a very believable 7.48% net yield at a 40% expense load, which is right in line with what we would expect to see in terms of expenses in the Atlanta, Georgia market. And if you look at the last portfolio, this one is a 7 property segments owned by the same owners. Same deal here, newer properties, 3-bedroom, 2 bathrooms. This one's somewhere in the middle in terms of the yields that it throws off. So if you look at the financials on this one's listed for a total asking price of $860,000. Starts at a gross yield of 11% with a net yield of 6.71%. So it's an exciting opportunity. Any buyer that came in that wanted to buy any segment of this portfolio would have to take down all the properties in that segment. But if you bought it as a whole, all 35 properties, you're looking at a gross yield of about mid 11s and a net yield somewhere around the 6.3, 6.4% range, which makes this a really, really interesting opportunity. Cool thing about this portfolio, the owner again has financing on every segment. So if you're an owner that wants to take this and assume the financing, you can do that. A lot of institutions don't like to do that, but smaller owners, even funds that have to set up financing for their portfolios, love that. That means your financing set up, the terms are set up, and the only money you got to put down is basically the difference between the loan and the acquisition price, which makes it an interesting portfolio for not only institutional investors, but also for smaller individual investors and fund investors that are regional to the Atlanta market. So I'm excited about this. We're going to post this on our site and see if we can find a buyer for it. Thanks for watching.